Mhm. It's okay. Let me log out and log in again. The screen is it's in a minimize mode. I'm trying to maximize it, but
Okay.
it's not coming up. Let me log out and then log in again.
Okay.
Okay, I'm back on.
Okay.
The percentage of intelligence that is not human is increasing.
Okay, good. Can you see my screen now?
Eventually, we will
Yes, I
represent
see
a
your
very
screen
small
clearly.
percentage of it.
Yes.
I try to convince
That's good. So we are trend traders, and the major characteristics of a trend trading is like we are not predicting, instead we are following the trend. We are not picking the bottom or the top of the market. Instead, we're following the trend, and we don't have to be right all the time for making the best trades. Now, this is the component. So understand this, and we'll go practical on this. Now, you identify the trend. I've taught you this severally, using the moving average, using normal definition of trend. We call it blind eyes of identifying the trend. Then your low risk entry point, which is what spoke, which is where we are looking at the timing of your trend, because you have to time. So the timing of your trade. Hello. Hello.
Yeah, I'm with you.
Okay, so the low risk entry
I'm with
point.
you.
The low risk entry point is where we will now work on timing your trade using some basic technical tools, which I'm going to share with you in a practical sense now. Then when we come to the part of optimizing, that is where how you now place your stop. When you are wrong, what helps you know when you are wrong? How do you scale in more trades? How do you exit your trades? And how do you add more to your trades if you want to? Basically, when it comes to trend trading, there are a few things. Your setup your entry trigger, and your initial stop loss as a rule on money management side. So let's go this. Now, you notice this is a chart of Access Bank.
Okay.
And this is a weekly time frame of Access Bank.
Please, are you recording?
Okay, let me just, sorry. Okay, I started recording. I've been recording. Yeah. I'm recording.
Okay.
Now, this is a weekly chart of Access Bank. Before now, we've been working on the 30 time frame. Am I right?
Yeah, I think
surely,
so.
Surely we've been working on the time frame. And I've not even added anything like this before. There's this green line on it.
Yeah, I'm seeing
So
that for the first time.
So for the first time. This is what they call Bollinger Band. So there are two different tools that we can make use of in our timing, our entry. The first tool is you can use the Bollinger Band, and we can use the Fibonacci. And so let me give you a simpler way so that you don't stress yourself on understanding the market. And it's as simple as anything. You don't stress yourself and it has worked. I validated it severally. Now, a Bollinger Band has what we call an upper band. Let me go for a plain chart so that you have, see plain charts, okay? So a Bollinger Band has two levels, the upper band and the lower band. It's a standard deviation. It's calculated using standard deviation. Now, the time frame I use with it is the weekly time frame, which means that it gives me enough time to see what the price has done, and it filters out all that noise you want to see, that you might have seen that has happened before in the market. Now, the other important factor here, let me delete the MA, is the moving average. Now, the first thing you do is this. You add up an exponential moving average in your chart of 100. 100 day moving average means that you're looking at the last 100 weeks. How are you getting it, sir?
We're looking at the last
100 weeks.
Okay.
So in actual fact, you're looking at a longer period of time. Then the second one, which actually we also did the last time, which is 200. If you remember that too.
Yeah.
You're looking at the last 200 weeks. And that's about 2 years. That's about 4 years.
200 weeks.
Yeah, so 200 weeks divided by how many weeks do you have in a year? Doesn't mean you have 4 weeks times
48 weeks. About 40, is it 56 weeks in a year?
Yeah, 48, 56. So divided by 56, you're looking at the 200 weeks shows like 4 years, about 4 years, while the 100 weeks looks like about okay, good. Okay, good. So now, when you have these two, the 100-day moving average is in the shorter time frame, while the short-term moving average, when the 200 is a long-term moving average. The basic principle is very simple. You want price to be trading above these moving averages, and the moving average should be traded in the direction of the trend.
Sorry.
Now,
excuse. The 200, is it exponential or is it
the exponential moving average, EMA?
Okay, both the 100 and the 200
Both of them are
exponential.
here. Yes.
Okay.
So what it has done is this: if you want to use it for crossover, you want the 100 to cross above the 200 to signal a buy trend. But when it crosses below the 200, it signals a sell. That's the crossover, when you're using moving average for crossover. Now, in this case, again, you can also say, using it as a way of determining your support and resistance. In actual fact, when the moving average, when the price is finding support, or when the price trends to test, to touch, let me use the word touch, the moving average, EMA, after it has rallied up, tries to touch the moving average after it has rallied up, then you say the MA is serving as a support. So you now need some other things to back up this basic notions for you. Now at this point, you see that price has gone above the both moving averages, and has come back to be trading around these moving averages. Now, what do you now do again? Now you want to time your entry, because the bias is formed around bullish. But again, anything can happen, it can change. So you want to now time your entry. And another way you could do that is to say, add what they call the Bollinger Band to it. So the Bollinger Band exponential period is 20. And remember, we talked about volume the last time. I hope you remember that.
Yes.
Good. So I ability to use volume with it too. And in this case, volume may not really be necessary, but you can also use it. Now, the Bollinger Band works in a way. You see, we have an upper green line and lower green line. Are you able to see that?
Yes, I see it.
Okay, good. So this is a way to work with the Bollinger Band. We call it the BB. We call it the Bollinger Band. It was developed by John Bollinger. Bollinger Band. It uses the exponential moving average to determine it. So you only work with the Bollinger Band when it is, there are different periods in the Bollinger Band. We have what's called expansion period and contraction period. Now, what do we mean by expansion? That is, the two bands is expanding. The upper band and lower band are expanding as price trends or as price moves. Now, obviously, you can see something on this chart that the main price was trending down. What was happening to this green line? It was expanding down. It was going straightly down. And we now got to a point when both of them, this also was going down, but we now got to a point where both of them were staying around the same level. They were not going down at the same time, but instead they were contrasting.
Yeah.
I hope you get that.
Yes.
Good. So on the contrasting period is the time where we say the band is in the range. I guess in logic. Now,
yes.
Just follow this simple logic. No stress. This you can know when to be in the market and when not to be in the market. Now, the only time you want to make use of this approach is when the market is contrasting and when price has touched the lower band.
Okay.
Let me repeat it again. The only thing that is important for you that you want to take note of this and you are thinking of acting is when price comes to touch the lower band and it is contrasting.
Okay.
Now, by the time it is contrasting, that is the most important time for you. Now, what other things validates your points? To validate it, you need the price to be at the lower band, lower contrasting, let me use that phrase, band. 2, you also need to see price at the support level. When I mean the support level, remember I said MA is acting as what? Support. So which means that you want to see them at MA. I hope you get that.
Yes.
Good. Then the final thing is you want to see most likely or most importantly a pattern at the support. If you see those 3 happens, then it's important that you can take action. But if you don't see any of them happen, go to another one, go to another store, forget about it. Now, let me show what I mean. You want to buy a stock at a discount. There are also some exceptions to the rule, which I also show you. But you want to buy a stock at a discount, but you want to be sure that the share you want to buy is already trading in a particular direction. And the direction that it is trading is bullish. Are you with me, sir?
Yes.
Good. You want to ensure that valid. First of all, the first thing is the trend is bullish. How do I know that? Price has crossed above the moving average. Now the trend is correcting. This is what I mean. Let me draw it. The trend is bullish. That is the first thing. Now the trend is correcting. This is where I want to now enter the market because my interest lies around here. Please, did you get that?
Yeah, you said at the point where the price is correcting.
Thank you. So
That's where your interest lies.
That is where your interest lies. That is what you want to time. Now, how do you now time it? You now use these basic tools that I told you about. You want to ensure that at this point is a point where you see the MA, is a point where you see the Bollinger Band. That is the lower Bollinger Band. Am I right?
Yes.
And the point where you see your pattern.
Okay. Those 3 factors.
The moment those 3 factors happen, of course, you cannot decide to say, okay, let me now see whether there's volume to back it up. Whether that, but every other thing, you understand? Please, do you get what I'm trying to say now?
Yes. So
now let's go practical. Now there are some exceptions to the rules too. It's not that it is fixed and the hardcore. I'll show you some exceptions. But see, Every time you see it is when you take your action. If you don't see it, leave the market, which means that you may not even trade more than 3 or 4, 5 times in a year with this strategy.
Really? Okay. Okay.
Yeah. Yeah. So this is the way it works. It's as easy as that. So let me show you some of the things we have seen on this chart and how this has worked so far. Now we have confirmed that the trend, the only time you want to buy, the only thing you can do in this market is to buy. You can't do any sell.
Okay. Nice, using this strategy.
You can't sell. You can't go short in the Nigerian market, so you can only buy.
Okay, I know.
So now, but the good thing about Bollinger Band is how to determine your exit. I will show you that. You will see something about taking your profit, which I will also show you. Now, now you see that if ordinarily looking at the chart, you will see that the only time the condition is about to meet, you're about to meet that condition, is about happening. Yeah, you see that that's what's about forming now at the moment. Hello, are you with me?
Yeah, I'm with you.
So now you see something that we had an uptrend. Let's look at this now. We had a downtrend, isn't it?
Yes.
But the Bollinger Band was expanding, so you ignore it.
Okay.
But at this point, it is contrasting. Am I right?
Yes.
But there's another thing that has happened here. The moving average is trading above it. Please,
yeah.
I will come back to this point later.
Okay.
One of the things you want to do is to trade at a discount. Discount is what you're looking for. You want to buy a stock at a discount. Are you getting me?
Yes.
So look at this, sir. The trend is up. The trend has come back down. The trend is trading around the moving average and the Bollinger Band, lower band.
Yeah.
You take your buy. Ideally, you will have taken your buy around here. Let me call this call. Are you with me, sir?
I'm with you.
Okay, good. So you see that you see that when this happens now, you take your buy because the three factors which we are looking for are occurred. Please hold on 1 minute. David.
Okay.
Please on the gen, be fast for me. Be fast. Oh, please, 1 minute. Let me get back to you, please.
Okay, all right.
Hello, sir. So sorry about that. Hello?
Yeah, I'm with you.
Yeah, so sorry about that. So sorry about that. The NEPA took light. So
No problem.
because so the only time this three condition has been able, we have been able to meet this three condition is this period. Are you getting it?
Yes.
So now this is an ideal setup that we're about seeing for the like of Access Bank. But if you don't see it in any, you move on to another, you find another share or stock to buy. Now,
Okay.
I said I want to come back to this point. Remember, we are talking about discounts because you want to always
Yes.
buy a discount. Why is this point very important? Because yes, we now saw it contrasting, which is a sign for us to think of buying, which is that there will probably be an exhaustion in this downtrend.
Yeah.
Now, we now saw two conditions being met here, the lower band and there's a pattern. But it's trading above the moving average. Now, what does it mean? Support and resistance. I explained the concept of support and resistance to you, isn't it? Remember?
Yes.
Now, this is a strong support because 1, 2, for 3 consecutive times, price could not go below this level. It means that there's a resistance for it to go further down. But we had 2 of these conditions being met, so you can take your buy. Let me clear this so that you understand. The only time we did this, we had a variation around the condition is because we saw a contrasting band. Look at this point. This one was not contrasting.
Yeah.
So it didn't give us any. It didn't give us any reason to like, okay, let us have a variation around our strategy. It did not. Now look at this too. We saw it here again, and we saw a support here. It gave us a reason to say we can take the trade.
Okay.
Please, did you get those things very well?
Yeah, I can see it. I can see that there are about three areas where it contracted, and then there was uptrend after.
Sure. So that's the only time you want. This is contracted this time, but it didn't meet any condition because it didn't touch the lower band.
Okay. So the tail of the candle must touch the lower band.
It must touch the lower band. If it doesn't touch it, it did not meet it.
Okay.
Now it gives us more validity if the 3 aligns, which it does here. Not now.
So I'm not seeing the pattern that formed there. What type of pattern is it?
Now this is let me clear it. So let me zoom in so that you see it very well. 1 minute. Let me zoom it. This is like a doji.
Okay.
What you're looking for is like an AMA or a doji. Okay, sorry. Let's look at this one. What did you see here too? Like an AMA or doji?
Yeah. Yeah.
Isn't it?
Yes, I see it now.
Okay, let's now go a bit. Let's go a bit again. This is no, it wasn't this. This too around this was contrasting. So we saw this two there. So I hope you're getting it, sir.
Yes, I understand now.
Good. So you don't see it every time, you only see it once in a while. Now, if you don't see it, move on to another share. Every time, the only time you go by it is this strategy. You don't trade every time. You take your trade once or twice. There are so many shares you can look at, especially the banking stocks. You just go for the banking, consumer goods, and industrial goods sector. The same pattern is forming at the moment in GTBank. But prior to now, we didn't see anything. Are you with me, sir?
Yes, I'm with you.
Good. Let's look at it. Okay. Let's go to another one. If you don't see, you don't force it. You only go to what you can see. Don't force.
A quick one here.
I'm with you.
So the MEs we discussed before, were they also EMAs or they were SMEs?
They were SMEs, but perform the same function.
But in this very strategy, we are using EMAs.
EMAs, yes.
Okay. All right.
So you see that you don't trade every time.
Okay.
You realize that you don't trade once in a while and you pick your trade, and you know that when you're picking your trade, you are 95% sure that what you have done is right.
Okay.
I hope you get it.
Yes, I'm with you. I get it.
Good. Okay, good. So now, if you don't see anything, don't stress yourself. You just have to leave it. Go back to another one and come back. The only time, like I said, look at this now. For instance, now we're having a bit of exception around here too, because yes, it's been trading down, but here it's a bit contrasting. So we saw a pattern, and from that point it went up. So what determines your exit on a profit level is when it touches the upper band.
Okay.
So you want to know you want to take profits. Your TP is when it touches the upper band. When price touches the upper band, then you take your profit. Are you with me, sir?
Yes.
Good. We'll still optimize this strategy. Don't worry, we'll still optimize it, but looking at it like this, you will realize that you will know when to buy and when to sell in a simple way. Don't stress yourself. Now, can you adopt this strategy on a lower time frame? Yes, you can. You can go to daily time frame to trade with it. You can go, but I prefer to go for weekly because it smooths out all the noise.
Okay.
All the noise are removed. You don't see no much noise. Everything is smoothed out. I hope you get that, sir.
Yes.
And I hope you took note of all of these things. Don't worry, you'll get a recording too. It's practical. This one is not theory, it's much more practical.
Yes, I see it.
Now, let me do a recap, then I'll give you an assignment. So this assignment that you have to, this one you have to implement and you have to write it down.
Okay.
Now, a recap is this. We work with the moving average. We want to ensure that we are only trading a stock that is trending up, that is an uptrend. We are not going for anything less than uptrend. The only time we can go for something that is in a downtrend is when price has gotten to a significant support and the Bollinger Band is contrasting. Now, but in this case, what we are interested in is when it's uptrend and there's a correction and price has come to touch the moving average, which will be acting as support. 1. 2, the Bollinger Band, it must be touching the lower Bollinger Band. Then the third one, you must see a pattern like an hammer, a doji, or a double bottom. Then you know it's a good time to buy. Now, an adjustment to the system says that if peradventure price has gone below the moving averages, now we are in a downtrend, but has gotten to a major support that you feel or you have seen that they can't go below that support. The way you can determine that is when the Bollinger Band is now contrasting and there is a pattern formation around that point. Then you say you can take your buy. I hope you get that, sir.
Is this an explanation or is the assignment you are giving?
No, it's an explanation. No.
Okay.
It's still the explanation. Then I'll not give you the assignment now. The assignment will be very simple. Don't worry, don't stress yourself. The assignments will be, you look at least 10 different stocks. Plot this stuff into it and write out, okay, on so day, these three approaches aligns and I'm taking a buy. Are you with me?
Yes.
On so day, these three tools align and I'm taking a buy. Then I exit at the upper band. I exit at this price. I'm taking a buy at the price gave you that signal. For instance, I say, let's assume I say the three strategy aligns and I'm taking a buy at this point. I'm taking a buy at 22 Naira. I will note it down. But because this is a present event now, we are still in the present, you have not gone to the, so you can scroll back and say, okay, I've seen the strategy align at this point. I'm taking a buy. For instance, now I saw two strategy align. I take a buy. Are you getting me?
Yes.
I see the three align around this point, for instance. Okay, let me just, I see the three align around this point. I take a buy. So you must note them. Buy, note when you took that buy, each of them, the date you took it and why you took it. Now, the variation will now be, I saw two align because it has been on a downtrend and I took this trade. Are you with me?
I think I didn't get the conditions.
Now, I saw two align. The two is a contrasted band and a pattern below the moving average. But there's a major support at that point. For instance, let's assume I saw price come here and it goes to this support. This is a major support because it was support at 2016 and same support at 2020. And I saw a pattern and I take a buy. You must write it down.
Okay, so the conditions where we can use 2 out of the 3.
Yes.
Is when we have a support, a major support. Is that correct?
Yes, major support.
The support now, is it going to be historical support level? Okay.
Yes, historical support level. Are you with me, sir?
Yes, just a minute. So in this case, price has to be at a historical support level.
Historical support
and then
level.
Make do with 2 out of the 3 conditions aligning.
Yes.
Okay. Okay, but you also mentioned volume, but you haven't.
No, why I didn't touch volume is that volume may not really be important in this strategy. Volume is just a way of adding more weight to your conviction. It's not that it has any particular thing to do it. Because, okay, let me see whether there's volume too. If there's volume, then I know that it's adding more weight to it. So you can decide to add volume to it, or you can decide not to add volume to it. Volume is just like adding more to your conviction that, okay, I'm right. Volume is also adding more to it. So the probability that I'm right, the percentage of me being right in this trade is around 95%.
Okay. So the EMAs are 200 and then 100.
Yes. Okay, so okay, so your assignment will now be